Whenever you are opening a buy, if the market instead of going to the profit target, most of the time coming to hit you to stop loss, probably you are missing this pyramid of trading. Yes, you have heard, not the pyramid. Pyramid of trading. This is what exactly I will be discussing in this video to understand how to identify the pyramid of trading to increase the probability of your buy or sell position. So stick till the end. Okay, today. So before explaining how you can apply what I call the pyramid of trading in your strategy in depth, this is going to be very, very important lesson. So make sure you stick till the end. First, let's understand the foundation of this pyramid, which is the pyramid. Why there are 3 points in pyramid. Now imagine that pyramid is built on 1 point. Then it's one dimension, right, which is almost invisible. If you look at the 2 points, then we can see the 2 dimension, which is also not possible. What about the 4 points? If we apply the 4 points, then it will be inefficient. And 3 is the most efficient number for the pyramid. And that's why it is built on that number 3 or the 3 corners. 3 also very important numbers in many aspects, as it brings everything into existence with 3 dimension. Firstly, we'll be understanding the basic trajectory of the market movement. Now, how the market moves? There are some pattern it always will follow, no matter how the market is chaotic. Now, smart traders are those who find the order in the chaos, because our brain is very smart to find the order in the chaos. So if we look at this market, what do we see? That the market is forming series of lower high, right? So which is in a downtrend. Now, when a market in a downtrend, it will never stay in one direction. At some point, this trend will end, and it never end without any warning. So understanding this warning is the first understanding of when the market changing its trend. Now, what are the warnings that the market give you before it change its direction? It can change the trend in couple of ways. One of the most common way that we will be discussing here is moving in a sideways or in a consolidation market. Now, if you look at here, what do we see? That after this downtrend, the market has gone an extended period of time in a sideways with multiple times liquidity grabs. Now, if you look at here, you can see this is the resistance here, resistance here, resistance here. The market multiple times, the price tested that level and rejected, turning that level into a very important supply area where the seller interested to sell. Now, there has time come, the smart money started to come in the market, and then at some point we can see that this level is broken with a stronger momentum. That supply area now turn into demand area. Now, once this level has broken with a stronger momentum, the word stronger is very important, because we have seen in the past also multiple times the market has tried to break that level, but this time the momentum was so high that it managed to break to the upside, and with a very stronger momentum that in most of the time it will be identical. Also, I will be showing you quite a few plenty of examples, so make sure you stick till the end to see in the real chart how it plays out. Now, once you see the market has broken to the upside with a stronger momentum, at some point we will see that pullback. Now, once that pullback happened, why this happened, guys. It is very important that always ask questions. Keep in mind that being a trader means that becoming like a curious child. The more curious you are, the better you will be trader. If you are curious, then you know that you are a better trader. Now, asking question is very important. So when you see that pullback, why this pullback happened, seller has come in the market, should you sell? Because this question I more often see in the live session, trader asking that, coach, should I sell from this level? Now, selling from an uptrending market is nothing but losing. So what we need to do here is identify that pullback to see that the smart money now most likely taking profit from the market. Those who bought this market now started to take that profit. Now once profit taking happen, we can see the market buy again. And this level where we saw that the market started to consolidate, form a structure, that is what we found the base of the pyramid. This is what we need to look for when the base is formed. Without foundation, nothing is possible. We found the foundation of that pyramid. The next step is, once we found that foundation of the pyramid, we need to find the first component of that pyramid, or the first side of that pyramid. Now the most important first side is the market structure. Now, if the market has broken out to the upside, we can see the first side of the pyramid, which is the market structure. And once we found that market structure, we see that this is a bull market creating series of higher high and higher low, which is in an uptrending market. Now, will you be buying in this market instantly? Well, most trader will do that. Why? Because it tick the boxes, it follow the patterns. When you follow that rules and everything, tick all the boxes, probably you might get an award as well, which is. But the smart trader are those who don't care about the award, because they wait for the market to break from that structure. The real goal of trading is not always to tick the boxes, but to make money. Now, once the market has broken out of that previous swing high, which is the previous resistance, and we can see that it creates a new higher high, and the market again, the buyers start to take profit, and as a rule of thumb, it should be testing the previous resistance, which is turning support here. And once we see that, we can expect from the buyers again to buy and then to create a new higher high. Now, what is the best strategy to trade this market, as we have found the first side of the pyramid? Now, impatient traders especially started to trade this market, which is an ideal market where the market is following the rules, which is the creating series of higher high and higher low, and most trader will buy that market. As you know that most trader lose money, but the smart trader mostly wait for making money in the market. Therefore, the smart trader are those who wait for that market structure to be broken, to find the second side of the pyramid, which is the breakup structure. If you look at here, we can see the first side, which is the market structure. Second side is breaking from that market structure, returning in the opposite direction of the trend to find the second side of the pyramid. Until we complete the pyramid, we will not be trading as a smart trader. This is the main goal here. Now, once you see that the market is forming series of higher high and higher low, we can see that market structure and then break from that market structure. Now there are many levels of traders in the market. The first level, who are very good follower of the boxes, they stopped out along the way when the market has broken from that structure. Now, why? Because every time when it is forming series of higher high, higher low, some traders are buying, putting their stop loss just below the previous swing low, or moving their stop loss to trail that to the previous swing low. And then once the market breaks from that structure, we can see the second side of the triangle. Now we can find there are second level of trader who are considered to be smarter and patient, started to sell this market thinking that it's a trend, long trend. The market breaks from that structure, that means that the trend changes, it's long enough, now it's time to sell, just to see that this market, after breaking from the structure, again started to move in the direction. Rome is not built in one day, trend also not built in one day. Therefore, it's not gonna break instantly. It takes a lot of effort to change a trend. The second levels of trader who confirm only the second side of the trimit has stopped out. Smarter trader are out of the market. So who is winner in this market? Those who are smarter than the smartest. Therefore, we need to wait for the third side of the trimit, which is the price action confirmation. As we have found the market structure, we have seen the liquidity graph. The third step is to look for the price action confirmation. When you complete this trimit, the foundation, the market structure, the first side, and break from that structure, returning near to the foundation, and then confirming with a price action for the entry. These are the three important sides of the pyramid of trading that I follow in my trading to find success. Now the question is, how do you know when the price action is confirming you for this movement to the upside? Let's discover that from the real chart, from the real trade examples that we can see in the market. Okay, so let's see this example. We can spot plenty of examples and it works in all time frame, in all instruments. So let's look at this ideal scenario on euro dollar. Now we can see that euro dollar on the 15-minute chart has gone for an extended period of time in a sideways market. And after this sideways movement, we have found that there's a resistance here, support here, resistance here, support here. The market was respecting this level multiple times and moving in a sideways. So we found the foundation that this market may change its downtrend to either to the downtrend or to the uptrend. It will depend on how the market is reacting from that sideways situation. Now what we have seen that from that level, the market aggressively has broken completely to the upside. So this is the first step that we need to understand, as to understand the first side of the trimit, which is the market structure. And also we need to look at the health of the candlestick pattern that has broken out of that structure. What do I mean by health? We need to look at the ATR value of that breakout candles. Now ATR is average true range, determines how much volatility on a particular period of time. That will give us an indication of those candlestick pattern in relation to the other candles inside the foundation zone. So if you look at here, you can see how small those candles are, which is low volatility and low volume. And we can see that the breakout candles way more than the sideways candles. So this is the first sign that the smart money is trading the market. Guys, keep in mind that trading is seeing the unseen. Becoming a trader means that you need to see what cannot be seen in the market, because as a retail trader, the only information that we have is the candlestick pattern. Therefore, what we can see here is the bounce with a stronger momentum. Now, once we found the first side of we found the foundation of that trimit, and we found the first side of the trimit, which is the market structure. Once we found that, the next step is to wait for the second side to be completed. That means that to return from the structure, it doesn't have to come back to the order block, which we might see sometime leaving a gap, which is what we called a fair value gap. But we will consider a breakup structure. That means that when it was creating series of higher high and higher low, we want to see that the market has broken from that structure to complete the second side of the trimit. We are still in 2 dimension, which doesn't make any sense. We need the 3 dimension to understand the actual movement in the market, to know that what we need, the price action confirmation. If you look at here, which candlestick pattern looks to you that identical where the smart money buying the market? Let's look at using our also the liquidity flow indicator. Now what we can see that the price just has broken all this low, which is confirming our second side of the trimit, and then started to bounce back up with a stronger momentum, giving us the price action confirmation of this movement. And therefore, this is the candle that we can look for potentially buying. We have found the foundation, that the change of trend. We have found the market structure, the first side of the pyramid, which is a strongly bull market. And we have found the second side, that means that break from that structure. And then we have found the third confirmation, which is the number 3, is the price action. And that is all a trader needs to find the best probability trade setup. Still, there is something missing here, which is the risk management, which is key. And I have plenty of videos in this channel, guys. Make sure that also you watch that. Without risk management, nothing will work no matter what. Now let's see a couple of more examples to understand or to strengthen the strategy of the trimit. Okay, so let's see this on XAU USD. Now what we can see in this area, this instrument was in a sideways, and we can see that on the 4-hour time frame, the market from this level has made a bounce to the upside to this resistance in the past, and then drop back down again. We see the market was ranging in that zone for an extended period of time. And at some point, what we have seen from the support without creating any red candle. This is the key here to look at. As we can see that in this whole move, there was a bounce, pullback, and choppy market in a sideways. But in this area where there was a very strong bounce with a stronger momentum. And in that movement, if we look at, we can see that all those candlestick pattern, if we look at the ATR, they are higher than, if you look at this, all those bigger candles are full body green and almost one or more than one ATR. And without any bearish candle, it managed to break this resistance line. And once we see the market has broken that resistance, which acted here as a resistance in the past, resistance, the candle closed above, we can see the market in a sideway. And after retesting this once, it managed to bounce, and again we saw that that level is broken, which is the breakup structure. So we found the foundation, which is the foundation of the pyramid that we found, and then we found that market structure, which is a strong breakout, the first side of the pyramid, and we found that the market has broken from the structure. How do you consider a breakup structure? We need to see first pullback, return to the resistance, and then we want to see that it has made enough break from the original structure to find the second side of the pyramid. And then finally we see a price action confirmation. After breaking this low, we have seen a very strong bullish candle. If we look at the health of this candle, we can see it's a stronger bullish price action after break from the structure, giving us the price action confirmation for this potential movement to the upside. Now let's look at a lower time frame price action confirmation on XAU USD. Okay, today, so let's see this 1 minute chart on XAU USD. We need to make sure that always when we are using on the lower time frame, the market has enough volume. Now if you look at the 1 minute chart on XAU USD, we can see that after this extended period of consolidation on this market, the price managed to break from this structure with a stronger momentum. Now once we see this breakup structure, what we can see, the market has come for a pullback, and then it has gone back up again with another momentum, created equal high or higher high. And finally we saw that the second break, which is the break from the structure, breaking the previous important support level and the returning back to the upside. This is the candlestick pattern that we need to look at when we are looking for the price action confirmation. So we have found the foundation, we have found the market structure, which is the first component that we need to look at, and then we found that break from that structure for the second component and the price action confirmation. I believe that, guys and girls, you enjoyed this very important lesson. If you find value in it, make sure that you give a thumbs up and also subscribe to the channel if you haven't done yet. I'll see you soon again in another lesson. Until that, stay well, stay happy, and trade safe.